Laurence Balanco is with us of CLSA. Laurence, good morning. Great to have you with us here. Thank you very much for joining us. You know, fundamental analysts, of course, when we speak with them, they'll kind of sort of say, well, underperformance in 2025 means better performance in 2026. But I think, you know, on the technical side, I don't know if it works that way, because weakness begets weakness, strength builds on strength. We've had a bit of weakness here in India, Laurence. So what's the setup as we get into 2026?
Yeah, I mean, it's interesting. If you look at Nifty itself, you got up to the 26,300 upside target late last year, and we've really just been in a holding pattern. We've pulled back, but we haven't seen any major levels broken. We've got quite a good support zone between 25,300 and 25,500. If you look at the mid-cap sector, that's probably the one that we're most constructive about for 2026. We've been consolidating there for nearly 24 months. And I think a meaningful break through the 62,000 area for the mid-cap space, gives us upside of over 30% on that breakout. I think in the near term, again, we have to be patient. We've started the year in the emerging markets, at least seeing high momentum in the North Asian markets, particularly Korea and Taiwan. And that has taken some of the shine and I think incremental flows into India away towards those North Asian markets, but you haven't seen any major breakdown. So a trading range and some patience warranted. We haven't seen any major breakdowns at the key sector levels for India.
Laurence, hi, morning. This is Rima here. Now, you described 2026 for the Asian markets as having a boom-bust structure. Can you explain what this means for the individual markets and timeline?
I mean, so the interesting thing, we're looking for the boom to continue in the tech side. So we think the first half of this year is still dominated by the acceleration in a lot of the tech plays, markets in Korea, Taiwan, and Japan outside of that emerging market basket. And that's where we've seen the acceleration in the start of the year. So that's our boom thesis. We do think that starts to roll over come the second half of 2026. And that's where we think the setup for India getting a bit more attention and out of the shadow of the North Asian markets can come to the fore and get a bit more momentum on the upside, particularly the mid-cap space, as I said earlier on. The other part that we've seen the boom structure play out is in the commodity side. So obviously precious metals have been leading that. But as we ended 2025, we saw a number of the base metals break out, which we think that uptrend continues at least through the first half of 2026.
All right. Hi, Laurence. Good morning and good to see you. We're Nigel on this side. So the other big call that you're making is the continued dollar weakness. We've already seen it pull back more than 10%, from the recent peak. What are the levels you're looking at on the dollar index and what it could mean for emerging markets versus developed markets? Is there a ratio you track? If yes, where is that headed?
Yeah, absolutely. So if we look at the dollar index for the past 4 months, we've really just been holding in a trading range. So between 96 and 100, but that 100 area is a major level. It basically represents the lower boundary of the 2022 to 2025 topping pattern. Now we call that a topping pattern because we had this 14-year uptrend in the dollar running into that 2022 highs, and the break below 100 suggests that we now have a major dollar top in place. And that gives us a measured downside target at the DXY level down to the 89 to 90 area. So we saw 10% weakness through 2025. We think there's still another 10% downside just to meet our downside target. But some of the cycle work that we do when we look at the dollar index going back to the 1970s is that when we do enter a dollar bear market phase, that typically lasts 5 to 7 years. And the ultimate decline is closer to 40, 50%. So we think this 20% is the base case for this topping pattern that we've seen in the dollar index. Now, the question on a weaker dollar historically, again, looking at the charts going back to the 1970s, a weak dollar has been associated with rest of world equities outperforming US equities. And one of the biggest beneficiaries within that ratio is emerging markets outperforming developed markets. And we started this year with the emerging market versus developed market ratio confirming a breakout of a 2-year basing pattern. And that suggests another 16% of relative outperformance by the emerging markets over the developed markets. So we think that weaker dollar setup is constructive for the broader emerging market basket after underperforming since 2010.
Got that. Laurence, I just wanted your thoughts on commodities and metals, if you will. What are you most bullish on from here? And then, which stocks in that space in India would you like to own?
Right. Yeah. So from the commodity side, if we start off with the Bloomberg Commodity Index, a major base between 2023 and 2025, we broke out in the fourth quarter. That has been led by precious metals. So you've obviously seen the gold and silver recently start to accelerate their advance. On gold, we do have an unmet measured target of 5,100 to 5,200. Silver, we've already accelerated past our upside target. So we're a bit more cautious on silver here, but still think you can add to the gold setup, looking at 5,100 to 5,200 on the upside. If we move over to the base metals, aluminium has been one of the key breakouts that we've seen there. We're looking at 3,500 on the upside. But we have also seen copper break out of the 21 to 2025 trading range. And on the LME copper futures, we're looking at over 16,000 as an upside target there. So those will be the metals that we will be focused on playing these breakouts that we've seen in the fourth quarter of 2025. And we think continue through 2026.
Laurence, you said India midcaps are on your long list, right? And
Yes.
particularly Indian markets will come to the fore in the second half, which is when the bust cycle for Asian markets maybe play out. So any levels on the India midcap index, or are there particular stocks that you have on your radar that you're looking at carefully?
Yeah, we'll stick to the sort of index levels. If you look at the NSE midcap index, the 62,000 to 62,800 area is the breakout point. And clearing that, would confirm this 24-month consolidation pattern that we've seen. It's very similar to the consolidation that you saw between 21 and 23, where we had the last bull market phase in the midcap side. So we've got a very similar setup, similar duration and consolidation. And yeah, we think the upside at a minimum is 30% upside on that breakout. If you look at the midcap select index, so that's the top 25 liquid names within the midcap space within India, you've actually already cleared above the upper boundary of its 24-month consolidation pattern. So the more liquid names within the midcap space have already sort of broken out if you look at it at the index level. But we think that will broaden out as we go through 2026, with the midcaps being our top headline index for India.
All right, Laurence, what about the mother market? The US markets has been on steroids, right? It's done pretty well in the last year itself and started off this year on a positive note. We have midterm elections. Typically, what is the behavior you've observed in a midterm election year? And what are the levels you're looking at on the S&P 500?
Yeah, so let's go back to the sort of first point. 2025, S&P was up 20%, but it underperformed not only emerging markets, but the rest of the world versus US ratio. And if we look at the performance year to date, again, we've seen the rest of the world ex-US outperform the S&P, and you've seen emerging markets outperform the S&P. So we think sort of a key regime change continues to play out in 2026, where rest of world equities and EM outperform DM, and obviously rest of world outperform the S&P. So I think that's important, ties into the dollar view. If we look at the political cycle in the US, the midterm election year is typically a weak year. On average, the S&P puts on just below 7%, going back to 1928. In a midterm election year, that average performance is around the 4.5% area. And it's typically the period from April through to October that sees an increase in volatility and typically on average negative declines through that period. The market tends to bottom a month before the midterm elections, which take place in the first week of November. So we're looking at a first quarter run up with a 7,400 upside target for the S&P, but then becoming quite difficult into October for the S&P before having that typical fourth quarter recovery. But within that scheme, we do think rest of world equities, emerging markets are better placed for performance through 2026.
So Laurence, on the Nifty, coming back to India, on Nifty Midcap Index, you said that if it crosses 62,800, then it breaks out, and there could be a 30% upside after that. What about at the index level? At the Nifty, do you have a strong view on what Nifty might do in the first half, second half? Any levels?
Yeah, look, so we're currently in a well-defined trading range between 25,300 to 26,300. That's the range that we've been in since November. We do think that that's a platform, a trading range that sets up for a continuation of the Nifty uptrend. Breaking out of that would give us a new upside target of 27,800, and above that we've got another target sitting at the 28,800 area. But like I say, I think for now, at the Nifty level in particular, it is a game of patience as we continue to consolidate here. But those are the two upside targets I would look at on a break above 26,300. And then we've still got that longer term end of the decade targets, over the 40,000 area for the Nifty. That's the long-term structure which we keep intact and still think banks is one of the key sectors getting the market there. But in the short term, we're talking about a trading range and 27,400 and then 28,800 as two additional targets on a break above 26,300.
Okay, all right. Laurence, we'll leave it there. Thank you very much for joining us, and good speaking with you here on CNBC TV 18 as always.